The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Wednesday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. We kick things off with a little bit of weak economic data. GDP data declining 0.3%. A lot of that being driven by a huge rise in imports. And when you're talking about GDP, okay, GDP is what we as a country produce, right? Gross domestic product, the product that we produce domestically. Well, what happens when you bring in a lot of imports? When people are trying to get ahead of the tariffs, okay, what does that do? That dramatically takes away from the GDP number because imports are subtracted when you're talking about the gross domestic product GDP. And we'll get into it, but gross domestic product down 0.3%. The numbers we get this morning, they were looking for a decline of down 0.2%. And yeah, we picked things up with the market down about 1.5%. We're coming into that 5,500 price point, 5,503 on the S&Ps. NASDAQ 100 down about 2%. 19,253. The Dow off about 0.8% right now. The Russell off by 1.7%. Crude was already weaker coming into those numbers. We get a little bit of a pullback, but crude with a 59 handle to 59.70. Now we jump over to yields, the dollar, and then to gold, all related. We got the 10-year right now. Now, boy, you talk about a move, and we're right back to where we were overnight. Okay, so no substantial move on bonds. We're at 4.18% on the 10-year. You take a look at this thing. That is quite a bounce. We're at 4.6 when I was writing the newsletter this morning. We're at 4.8 right now. 4.18, excuse me. We're at 4.16. We're at 4.18. That is higher price and lower yields coming at this market right now as we're approaching 4.18 right now. So on yield weakness, the dollar still well under 99. Well under 100. 99.452. So the dollar now with a ceiling at about 100. And gold, I tell you, gold's looking a little weak right now. Okay, even with the dollar sustaining where it is, as in dollars under 100, gold, and before this move, check out the 5-minute. Look at this move, right? We were down a solid $52 this morning coming into that bar. Okay, we were down $52 before you got the economic numbers that came out. Okay, that's giving gold a little bit of a lift. Markets are pulling back right now. Gold was down $52, and we didn't have a lot of dollar movement, okay? So gold seems like it has a consolidation to do at these levels. It's been quite a run over the last couple of years. We just completed a 1-to-1 A to B, C to D move. You peaked out, and you can see, right, that 1-to-1 completes at 33.50. You get a spike high to 35.09, and we're bumping up the last 3 weeks to that 33.50 area right now. Gold off $21 right now, trading at 33.11. All right, let's get into those numbers. Economy contracts for the first time since 2022 on the imports surge. So that's the angle of this, okay? And this will change. There's not going to be a huge surge of imports now with we're dealing. There was a huge surge of imports, okay, to get ahead of the tariffs in the first quarter. You have GDP down 0.3%, okay, PCE, personal consumption up 1.8. Now here's consumer spending, there it is, which accounts for 2/3 of the GDP, advanced at 1.8% pace. That's the weakest since mid-2023, but better than the market was looking for. So consumers are doing all right now in the first quarter. Imports surged, and that is going to reverberate a bit. Imports surged and annualized 41.3%, the biggest advance in nearly 5 years. You're going to see a dramatic drop-off on this, which is going to give a lift to the GDP the next time we get it, right? We're getting a huge surplus in it, a huge surge in imports. Well, we're going to see a pullback on those imports, okay, which will be a less of a subtraction from the GDP when you go into those second quarter numbers, et cetera. And here we go. So because swings in trade and inventories, as we're seeing right now, can sometimes distort overall GDP. And I would argue these are distorted because of the import numbers, okay? Imports get subtracted. GDP is the number. Economists prefer looking at the final sales to private domestic purchasers for a better snapshot of demand. This increased at a 3% pace in the first quarter after rising an annualized 2.9% at the end of 2024. So strong numbers there. All right. Getting into one more quote. Yeah, you had the inflation numbers, 3.5% pace, right? And that's the number here. PCE, excluding food and energy, core, you're hot. Okay? So that's the last part of the conversation. What do you have? You have a weak GDP number, which is distorted because of the imports. The PCE is rising faster, and crude is not going to help this, folks, okay? The Fed focuses on core. They take out food and energy. The Fed is not going to get driven by crude prices that potentially can be driven by OPEC prices. We'll get into that later in the conversation, okay? Oil traders brace for another Saudi-led OPEC plus oil supply surge. Those are the type of headlines that illustrate, okay, why the Fed is not going to be driven by energy prices. They focus on core, and on the core side of things, inflation's running a little bit hot. And what I'll argue on a technical basis, folks, we got a slight uptick on the volumes on all the indices yesterday. Okay, S&Ps, you did 1.168 million versus 1.134 million. You're talking about 30,000 contracts on the futures. That's the difference. You've been sputtering out at these levels. All right, we're just right back to where we were in March yet again. As we roll over, forgive me. There we go. And yeah, we've had declining volume. We've been talking about in this program. Now, here's where I'll jump to, okay? There's your S&Ps. NASDAQ 100, same exact thing. All right? You're bumping up against the April 9th highs. That high on April 9th, 100 points above where we're at. We're just breaking into that bar. And we've had declining volume. Again, slight uptick. Yesterday, NASDAQ futures, NASDAQ 100, 561,000 contracts versus 505. But as you can still see, 561, that's lower than anything we got on the acceleration from April 22nd. And yeah, you have a low bar down here from April 21st, but you can see the trend, right? Lower volume coming up to these highs. Now, here's the kicker I found, okay? And I saw this article. Is it Bloomberg or Wall Street Journal? Is it the Journal? It is. It's the Journal. So here's this was like alarm bells in my head, okay? This one out last night or this morning. Early this morning at 5:30. I was reading it about 5:45 this morning, or maybe 6 in the morning, up early. And what it does, what it's saying is, what's happened since April 2nd, okay? And look at the clawback, okay? What's driving the rapid reversal of the historic market sell-off? Let's start and let's look at things on April 2nd. Folks, that is a disservice to write this whole article and have April 2nd be the point that you start your comparison in, okay? Why is that? Well, here's April 2nd on the chart when you're already down 10% in the prior 6 weeks. We'll take a look at this one. Stay tuned, folks. We're coming back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger Zen, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger Zen, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Welcome back, folks. We jump around. You got NVIDIA going to be down about $5 in the pre-market, trading at 104 from 109. Now we got Meta and Microsoft after the bell tonight. Meta shares down about $15 right now, almost 3%, as we got the NASDAQ 100 pushing 2% right now in the red. You jump over to Microsoft shares. Microsoft down about $5 to 389. So jumping back to this journal article. You know, it's remarkable that you would say, how are we doing in the month of April? Okay, S&P 500 changed since April 2nd, Liberation Day. It's an arbitrary day, right? Buy the rumor, sell the news. Buy the rumor, sell the news. They take out all the action of the rumor, and they only start on the news day. And meanwhile, April 2nd, I mean, so they go through this article. Here's what's driving the rapid reversal of the historic market sell-off. Folks, this is written as an opinion piece, and I love the journal. Okay, and this is like, what is going on here? Is this trying to tell everybody that it's been a rapid, and it's been a bid, but where's the conversation that all we're doing is bumping up against the area that we were trading into, where the market was already lower coming into the April 2nd day? All right, then they go over, hey, here's how much all these companies have made since April 8th in billions of dollars. Apple has made $564 billion since April 8th. Well, that's fantastic, folks, but check this out, okay? Apple shares, when you cherry pick a low, is up dramatically. But if you look at the context of where we were, either, no matter what you pick, okay? But how about just where we came into the year at 247? Apple, 15 billion shares outstanding for this company. All right, let me get the exact amount. Yeah, 15.02 billion shares outstanding. Apple's down $50 from the highs. Another way to say that is turn that Apple circle red and say that we're $750 billion off the high. Okay? Meta shares. Where's Meta in here? $90 billion that they're up. Well, Meta's $200 off their high, and they have 2.5 billion shares. So that's a good 500 billion that they're down. They're not up 90 billion. They're down 500 billion from their high when the volatility began, February 18th. Okay? These types of articles cause me worry, to put it lightly. Every other stock in here. Okay? There's no reason why you start analysis on that day. The only reason you do it is to frame something in a way that is not material. Okay, talking about the rapid reversal of the historic market sell-off, they make no mention that everything's still down. Apple's off 750 billion from where they were. Meta's off 500 billion from where they were. I could go one by one, right? They have Tesla positive here. It was like, what is this article? What is the purpose of this article besides cherry picking anecdotal numbers of how much you could have made if you cherry picked the low? And yeah, the president said to buy that day, and I'm sure there's a lot of people that did, okay, because it was quite a pullback. But even the last part of this, okay, and again, I'm not even sure who wrote this. I don't even look at it. Let's see who wrote it, as I'm giving him a lot of grief. Jack Pitcher. Not familiar with Jack Pitcher and the story that he's pitching, okay, but when you use the term just, the S&P 500 is now trading at just 10% below record highs. But under the surface, there's signs investors. I mean, just 10. Why not is trading 10%? Just 10%. They're phrasing it as light. This is an opinion piece in the Journal talking about how great things are. That worries me. Okay, and it's listed as a markets and finance article, and they cherry picked a day that makes no sense in the conversation of the market volatility and what's been occurring. Okay, people didn't get into this market on April 2nd. People been in this market, and you traded down from 6,100 to 4,800. You didn't trade down from where we were on April 2nd. And we came into April 2nd at 56.72 is the close on the 1st. Okay. But I believe we got that later on. It's just, that's a worrisome article, man. And that's a disservice to investors to cherry pick that day. They highlight some of the tariff. What about going back when some of the announcements were made that drove that down earlier? I feel like if you wrote that article in a classroom, the teacher would question the way it's framed, the accuracy of the way you've chosen to represent the performance, the pullback, and where we stand. And that's worrisome when that starts going out there. All right, let's jump to some equities with earnings, because we got a lot of companies with earnings. Super Microcomputer. Yeah, you talk about a miss. SMCI. This equity is going to down 25% on the open, from 35 to 28, but boy, did they miss, man. How about like $1 billion in revenue? Yeah, let's get the numbers. They were supposed to take in $5.35 billion, and sales were 4.5 to 4.6. Excuse me. Yeah, that's exactly it. Okay, and they miss on earnings on that number as well. That's hitting Dell in the same way in the server business. But yeah, they had a huge miss, and over a 90-day period, they're way off on where they think they're going to be. Talk about other misses. Snapchat. There's a move for you. From $9 to $7.72. You're going to open down almost 15%. I'll tell you, folks, Snapchat never makes sense to me. I enjoy mindless scrolling on Instagram occasionally. I do. Guilty pleasure, call it what you want. Snapchat doesn't make sense. I do have Snapchat. I'll see a notification on there. I don't understand it. I see things they don't even. I click on something that I think I'm going to watch a video for, and the people that I end up watching have nothing to do with what I clicked on. Maybe I'm just old in my mid-40s, but it never makes sense. And this stock continually is live or die. And look at that chart, right? You're going to open 772, and we got lows out there 708. And look at the volume. Just less action, less action, less action. We've been teetering around here for 3 years at this price level. And boy, they had a miss as well. We would jump over to Snapchat. Come on, computer. Yeah, so they're losing money, all right, on headwinds to start the quarter. This company continually has headwinds, right? They did take in $1.36 billion from 1.19. They're taking in $1 billion, 1.36 every 90 days. Global daily active users, 460 million. Average revenue per user, $3 almost, $2.96. Yeah, but they missed slightly, but nonetheless. I'd be wary of that one. That chart just seems like it's consolidating to break lower, and you're going to break lower by almost 15% right now on the open. You got a low of 708 out there. And yeah, we've been down at these depths before, right? Hoo-wee. You talk about a ride during COVID to $83, and right now we're pushing $7.75 for Snapchat. Other companies with their numbers out. Humana out with their numbers. They're trading higher, up to $2.75 from $2.59. You get Starbucks out last night. Missed their numbers. We're going to be down $10. Their new CEO saying it's going to take longer to turn around that company and what they're putting together. And we get jumped to the Starbucks headline as we come into the open. Yeah, sales disappoint, and they have a problem. And yeah, you got same-store sales. We'll talk about it. Same-store sales going down no matter what they're doing. They're spending more money on baristas, but nonetheless, same-store sales going down, revenues missed. Starbucks, what's going on? We'll be back. We'll talk a little Starbucks. We'll talk some other equities. Don't go away, folks. Stay tuned.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry's been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets kick things off in negative territory with the S&Ps off by 1.4%. Don't forget, we got our man Teddy Keckstack. He's coming up next segment, folks. Great day. We'll talk some currencies. We'll talk some commodities. We'll have Teddy on coming up after the next break. We kick things off on the opening bell. S&Ps off by 1.4%. NASDAQ 100 off by 1.9%. Dow off by about 0.9% right now. And yeah, let's jump around. We jump around to yields right now. Put it on a 15-minute, And yeah, you talk about a recoil, right? We get that number at 8:30, lower price, higher yield, and just like that, we're climbing. Higher price, lower yield. We're right back to where we were at about, 7 a.m. this morning with the 10-year at 4.17% right now. And gold contract catches a bid from the lows as gold only off about $19 right now. So you talk a little Starbucks. Starbucks down 11% on their earnings. They got their new CEO. And yeah, this one surprised me. Same-store sales falling for the fifth straight quarter. Fifth straight quarter. I give Starbucks a lot of business, man. I love their cold brews, and I do. Probably too much, but nonetheless, yeah, you can't deny same-store sales falling for the fifth straight quarter, right? Revenue, they miss as well. 8.76 versus 8.82. Their earnings, they definitely miss. What they talk about here, how about the operating margin? Falling to under 7% from 12.8%. Their margins just got cut in half almost. Now, labor cost rose. They're staffing it with more baristas, okay? So he's got a plan, their new CEO. Starbucks is spending more on labor, cutting back on how much it's putting into equipment. It's no longer planning to deploy its cold-pressed cold brew system, pause the rollout of equipment used to heat food. What's going on there, right? Cold-pressed cold brew system. I love cold brew. I go there all the time. So where is that going to structure things? That's what I found myself. Anecdotal. But nonetheless, they're going to be labor-focused. But guess what? That's eating into their earnings. And it's a tough scenario here where, okay, you love the story. Hey, we're labor-focused. And I love Starbucks, okay? But they got problems in these numbers. If you're labor-focused, you should be increasing revenue. You might be increasing costs faster than you're increasing revenue. But very rarely... And yes, if you got a turnaround, you got a turnaround, okay? But that's not showing up just yet. Right now, they have a problem. They're spending more money and taking in less money, right? Revenue is less than what the market expected, and they're spending more to take in less than what the market expected. At the same time, no matter what they're expecting, same-store sales declining for the fifth straight quarter. Now, net sales rising, okay? But yeah, same-store sales, which is a number much more meaningful. Slumping on 5 straight quarters. U.S. locations saw transactions fall 4%, and same-store sales were down 2%. There's your number. So that's a tough one, man. Starbucks down about $10, down 8% on the number. Excuse me, down about $7, down about 9%. And you take a look at this thing longer term. All right, where are we? We're right back to when the CEO stepped in. Look at all that optimism. All right. I don't even have to look at that chart. I know that's got to be the day that they announced that he's the CEO. Okay? You back it up. Where are we? Right back there. Now, in fairness, the market had quite a run as well. All right? That is right next to the August 5th pullback in the market. On the S&Ps, that's 5,200. We're at 5,500. So the S&Ps have done similar. Starbucks has been to that. But you talk about a run, man. All that optimism taken out of that equity. We're right back to where we were before he got put in. And the market's saying now, hey, let's go. It's time to start delivering. And, yeah, you're talking about being, 7-8 months into him being announced, and the stock is right where you were, down 9%. All right, you jump to some of the other equities. Snapchat down by 13.7% right now. Humana up by 3.5% on their numbers. Ah, yes, SMCI. I knew there's one more I wanted to get to. Down 18% on those numbers, 29.51. Whew. And yeah, that was a big miss. You're supposed to take in almost $5.5 billion. You take in $4.5 billion, and they're saying that some of those orders got pushed back. But you better believe that's what they're going to say. They got pushed back, and they'll probably get pushed back again for the same exact reasons, right? As they have a pullback from their expectations. All right, Yum Brands. Yeah, trading higher, actually. What's interesting is the headline out there is the revenue misses as Pizza Hut same-store sales fall 2%. Yeah, Pizza Hut's probably got a problem, right? Think about it. I used to have Pizza Hut all the time. Don't have them many times. But nonetheless, you look at Yum Brands, those numbers, you're talking about $1.79 billion versus $1.85. They beat on earnings, but they miss on revenue. Net income $253 million or 90 cents a share, down from $1.10 a year earlier. Yeah, and excluding costs to move KFC's U.S. headquarters to Texas, the company earned $1.30. So it is remarkable, right? When you look at the numbers, they make 90 cents a share, but realistically, if they didn't have to move the headquarters, they would have made $1.30. That's a big number, man. What is it, 100+ million? Yeah. How many shares do they have outstanding? Let's see. $278 million shares outstanding. Yeah, and it shaved 40 cents off of their earnings in the quarter. She's talking about more than $135 million to move their headquarters to Texas. Taco Bell, same-store sales growth of 9%. Man, everyone's eating Taco Bell, huh? You know, it's remarkable, though. You look at it, I think of Taco Bell. Haven't been to Taco Bell forever as well, but I know people are going to Taco Bell. KFC, I don't know. That's a tough competitor. I feel like they lost their, we all? I remember the nostalgic era, right? Pizza Hut, the Pizza Hut, you go eat in the actual restaurant, those big red glasses they had, those breadsticks. Memories as a kid, of course, but nonetheless. All right, let's jump around to some of the Magnificent Seven as we get this market deteriorating right now. Amazon off by 3.3% right now. Mentioned Microsoft and Meta after the bell. Microsoft off 1.8. Meta off 3.5 right now. And we get Apple and Amazon tomorrow. Apple off by 1.4% right now. Some other tech companies, Oracle giving up 2.3% right now. Salesforce off by 1.5%. Let's check out the banks. JP Morgan down by 1.5. This market's picking up steam to the downside right now. And, that was probably the sell at the close yesterday. Risk-reward-wise, optimism in this market, we have. To the point of the Wall Street Journal article, we've gotten quite a recoil, okay? But, man, you talk about a textbook acceleration. Where do we go? Right to the highs of April 9th, okay? Right to the lows of March 13th. And that is a technical area that's difficult for this market to get over. And the numbers we got this morning, well, that GDP number is probably distorted by the imports. Not probably, right? But, yeah, that's a tough number in the face of an inflation number that's hot on a core basis. And we got a Fed decision a week from today. So we got Microsoft and Meta after the bell today. We got Amazon and Apple after the bell on Thursday. And then we get non-farm payrolls on Friday. And ahead of the non-farm payrolls, we didn't even talk about it yet. You got ADP payrolls this morning, and they come in at just 62,000 in April, well below expectations. All right, they were looking for 120. It comes in at 62. Now, the ADP, it does vary from that non-farm number on Friday. But we'll see. Market in negative territory. We got S&P's off 1.7, NASDAQ off more than 2%. We're coming back with our man Teddy Kegstad. Don't go away, folks. Be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day, Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks, and that's my bad. Teddy had emailed me, whereas I couldn't get him, but he emailed me on Monday and said, unfortunately, he had something, he couldn't make it this week, but we will get Teddy back on next week. And folks, check out that Tiger Forex report. Still had an outstanding report out on Mondays, as always. Updates throughout the week when warranted. You got so much action out there, whether you're talking about Forex, yields, the dollar, and what I always say is you don't have to trade Forex to get a tremendous amount of value from the work that Teddy does on a weekly basis, whether you're talking about yields, you're talking about currencies, okay, and just a macro concept of some of these currencies, the pairs they trade in. Check it out. He's also got a couple of great webinars under the services tab over there, talking about capitalizing on time with calendar stock option spreads. If you're into options at all, check them all out. $97, folks, and you gain access to that forever on your members page on either of those. So the ADP, as I was mentioning, right, 62,000 for the month. Smallest gain since July of 2024. The market was looking for 120,000. Leisure and hospitality added 27,000 jobs. Transportation and utilities, 21. You even had construction in there at 16,000. Construction, right? It's a tough one. You know, you take a look at these home builders, you can't help. No reprieve. Lennar down another 2% right now. And this one, trying to wrap my head around what this exactly means, whether it's these stocks in particular, okay? They had been the only game in town for a while because nobody wanted to sell because of where interest rates are. It is intriguing, right, that we are now approaching, folks, almost 5 years. Not almost. COVID hit more than 5 years ago. There's going to be a recalibration. Initially, everybody was like, man, I'm never selling my home, okay? I'm never refinancing because I've locked in at 3%, and I'll never refinance at where levels are right now at almost 7%. We are approaching this level where people have a tremendous amount of equity in their homes. Mortgages have been between 6 and 7% for some time now. And yeah, we ever get a pullback to 6%, which you could, all right? The 10 years at what, 4.15% right now? And the reason why I say that is these home builders, when nobody else would sell their house, right? Supply was very limited for obvious reasons. Nobody wanted to sell their house. Everybody had a great mortgage rate locked in. And so they were stuck. Who wasn't stuck was Lennar, KB Homes, okay, the variety, D.R. Horton. But what if we're approaching an area where not only are they facing headwinds, okay, in the construction area, whether you're talking about cost of goods from Canada, cost of goods from China, labor costs in the construction area, okay, but you're also potentially entering an area where if we continue to get a pullback in yields, where we have going on, okay, go back to a daily, we got yields. I got to update that. We're pushing probably something like 4.15% right now. What that's going to allow is that's going to allow at the same time that the markets become more accustomed to those types of interest rates, and maybe Lennar And the DR Hortons, okay, let's pull them up. If you haven't watched the show, Lennar's down from 193 to 105. The reason why I talk about that it's not fair to start running scenarios from April 2nd is because if you do that on Lennar, all right, check this out. Remember I was giving the journal grief? Lennar was trading at 114 on April 2nd. Man, look at the comeback they've had. Folks, there was so much factored in already. And you had a run-up in the market on lower taxes, deregulation, right? And then you had the pullback when that took a second backseat to the tariffs that were taking place. So this is kind of a double whammy where Lennar is going to be facing that heat of higher construction costs, higher wages, et cetera, at the same time that people are potentially, and this might be a shot that maybe the market is not as bad as this chart makes it look, because it doesn't seem that way in Florida, folks. You know, we got lots, we have houses. There is still action. Still action, period, in Florida, okay? But maybe they're going to face a little competition from people being willing to sell as we're now 5 years past. Okay, and how long are you going to hold out, right? You're 5 years, you're 10 years into your mortgage, whatever it is. Maybe say, you know what? It's time to bite the bullet. Rates have been here for a while. I can always refinance in the future if they go down. And guess what? I'm either going to sell and move to a different home or I'm going to take that equity on a refinance. Now, home buyer mortgage demand drops further as economic uncertainty. Now, you get into the numbers, 6.89%. The remarkable thing is, okay, if things normalize a bit here, the 30-year fixed mortgage rate used to be about 2 to 2.5%, even less sometimes, above the 10-year. Folks, the 10-years right now is at 4.15%. Mortgage rates could easily be at 6.2% with the current yield focus. A little bit difference in there, okay, the volatility. But nonetheless, you see, we're not that far away from the ability for that to pull back. Now, when they talk about refinances, you talk about homes. Volume, let me do it. Applications to purchase a home dropped 4%. Okay, we're in exceptional times right now, though. Volume was just 3% higher than the same week a year ago, even though interest rates last year were considerably higher. Refinance activity dipped again. Mortgage rates remain close to 7%. So we're not there just yet, but I think people across the board are reaching a point that these are the rates. You know, we're not going back to 3.75. We're not going back to 3. We're probably not going back to 5 anytime soon. The market would be blessed right now, for lack of a better term, to get to a 6. Okay? You get a 6% mortgage rate in this market, watch out in terms of the demand that you will have come in. Okay? But here's the other kicker. Think about it. You get down to a 6%. I'm talking about these home builders in particular because, listen, my dad was running a real estate fund. He was always doing real estate. We got a bunch of investors that, of course, like talking real estate, okay? And I'm sure that you're looking at some of these home builders, but take that one into consideration, all right? Nobody has wanted to sell their house over the last 4 or 5 years if you didn't have to, as in you have a great mortgage locked in. You got equity in there. Your only ability to move, to sell the house is you're going to have to relinquish that loan, get another one. So there was a lot of pressure not to, right? Incentive. There was a lot of incentive not to sell. Well, we're now approaching 5 years out. Okay, this is a new normalization. It's not transitory. Rates are not going back down dramatically. All right, and even if the Fed cuts to a certain degree, the 10-year is still at 4.1 right now, folks. The 10-year is at 4.1. I don't imagine that tanking to any certain degree, okay? Now, there's a lot of volatility, but, you know, these home builders might be in trouble, even if the market is not in as much trouble. That's something I found myself looking at recently. Because, boy, you talk about it, right? Lennar from 193 to 106. DR Horton from 199 to 123. KB Homes from 89 to 49, and now you're at 52. But the other part of that is, boy, these things have been on a historic run. Okay, you back it up for 5 years, you quadrupled in price from the COVID lows. Back it up even more than that to get the COVID acceleration. All right, you come into COVID at $59. We've still doubled in share price. They were the only game in town as mortgage rates were skyrocketing, right? 2023, look at this run it had. Counterintuitive, but nonetheless, they were the only game in town. I think that's going to change for them. All right, folks. And now if you could check out the Tiger's Den. Somebody was saying no audio. I appreciate it. We'll come back, folks. S&P's off 101. NASDAQ 100 off 434. We're coming right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. S&P's off about 113 right now. NASDAQ off 470. Boy, tough day to come in for Microsoft, Meta. After the bell, you're going to come into those numbers with the market in the red as of now. Microsoft off by 1.8%. Meta shares off by almost 3.9%. Apple and Amazon tomorrow. Apple off by 1.55%. Amazon off by 3.9%. 3.8% will make it 180.26 right now. All right, let's take a look at Starbucks. Our man Darth in the den. A little bit of a bid off that bounce, 75.50. We're still down by 8%. You know, getting back to some of this article, and I mix everything. And I love Starbucks, folks. I love Starbucks cold brew, too. And one of the things they're shutting down is cold brew. I laugh at the fact that they figured out, right, they perfected the ability to charge $6.50 for people who are just getting coffee versus lattes. They normalized that you pay $6.50. Now it's like close to $8 sometimes, right? For like a venti latte, something like that. Well, you're getting milk, you're getting multiple shots. They said, man, what about all the people coming in and getting coffee? How do we make them pay $8 or $9 for a coffee? Let's call it a cold brew. Make it special, nonetheless, okay? But, you know, the plan here, I go to Starbucks drive-thrus, period. End of sentence. If Starbucks doesn't have a drive-thru, normally I'm with Tommy all the time, right? He's in the car, whatever reason. I won't even go to a Starbucks. I'll show up. I'll say, you kidding me? They don't have a drive-thru? And their plan, looking ahead, Starbucks' plan to improve its cafes with better seating and premium touches in hopes of enticing customers to linger. Listen, in certain areas and cities, makes total sense. All right, you're creating an atmosphere. I don't understand that one. And then we go to the fundamentals, okay? And I was looking at $60. How about that, Darth? You know, you're looking for a good entry? How about that base we built from 2015 all the way down to where we were at the COVID lows? But hey, we're at $77, man. The next level would be the lows here of 68, but I'd be looking for 60. You could scale in if you're looking, all right? But I wouldn't be buying here. Might not be done. Folks, thanks so much for starting your trading day right here at TFNN with me on the Morning Market Kickoff. Markets in the red. We're at session lows. S&P's off 122. I'm handing off the reins to our man Basil Chapman with the Tiger Technicians Hour. We'll see you tomorrow morning, everybody. Have a great one.